Hey SuperExers! Today, we're diving into the Relative Strength Index, or RSI, a key tool for any crypto trader. The RSI is a momentum oscillator that helps identify overbought or oversold conditions oscillating between 0 and 100. It's perfect for spotting potential market reversals and enhancing your trading strategy. Here's how to use the RSI effectively. 1. Trend identification. An RSI above 50 suggests an uptrend, while below 50 indicates a downtrend. 2. Overbought and oversold levels. Look for readings above 70 to identify overbought conditions or below 30 for oversold conditions, signaling potential reversal points. 3. Divergence. When the price moves opposite to the RSI, it signals a potential reversal. Remember, RSI is best used alongside other indicators to confirm signals. It's versatile, but beware of false signals in volatile markets. To optimize your use of RSI, combine it with other indicators for confirmation. Adjust overbought or oversold levels based on historical performance. Pay close attention to divergence for stronger signals. Thanks for watching. If you found this video helpful, give us a like, share it with your friends, and don't forget to subscribe for more insightful content.